you'll find these candlesticks where the market reverses either up here or down here, either up here or down here. So you'll see those. Everyone, double D at the KFX. On the last video, I promised you guys to show you guys how investing.com works. So if you are new to the channel, please go back and watch the previous videos so that you can follow and be on the same WhatsApp group with us. So without any further ado, let's get into it. So guys, as you can see right now, I'm inside my investing.com. So what you guys must do if you don't have investing.com yet, you must download the app or use the website. You can go to Google or any browser, guys, and just type investing.com and get into the website, and this is what you will see once you step into the website. So right now I'm in the market, but this is not whereby we'll be focusing on today. These are just the updates of the recent prices of the certain code. So if you wanna see the price of a certain code, you'll just come to this market, and if you want news, you'll just go to news, and because you're a forex trader, you can come to forex or search any news that of any currency you wanna trade. So this is whereby you'll be updated by the recent news and everything happening with a certain code. So our major topic or our major point will be here, guys, under calendars, because this is whereby we will be seeing all the events that will happen. So right now I'm inside my calendar, so I'll show you guys how to set your investing.com. So click on these three dots up here, and what I'm sure of, you'll see yours like this, and just make sure that filters is turned on and turn off the low events and the medium events. We only need the events that will affect the market and make the market volatile. So once you leave this one high, it will definitely show you the big event only. So once you get back to your calendars, and as for today, we only had two events, but I prefer weekly events so that I can prepare yearly and see at what days my favorite currencies will be affected. So as you can see, for this week, on Monday, we had euro event at 10:40, and as for Tuesday, we had USD news at 7, and tomorrow is Wednesday. We'll be having another USD event. So these are the small events. On the previous video, I shown you guys which event you must trade. So for example, like on Thursday we have CPI, and you know that CPI is one of the events you must trade if you want to trade fundamentals. So CPI is one of those big events that make the market volatile, especially USD paired currencies. So on Friday we also have GBP event, and you guys saw on the previous video that I said GDP is one of the big events you guys must trade. So investing.com helps you to be aware of the upcoming events, and you can also go for next week and see what's gonna happen next week. So we can see that we have a GDP event on Tuesday for the GPY currency pairs, and we have uh, which one is, oh, we also have CPI for GBP on Wednesday, and core retail sales for USD. So as you guys can see that I neglected this claim count change average earning indexes for the GBP because those are the small events. We only focus on big events to trade if you want to trade fundamentals. So this is how trading view will help you. So let's continue with our course. So we are back again, guys. On the previous video I also we ended whereby we were supposed to talk about the candlesticks. So let's carry on with the yesterday's course. So guys, today we'll be talking about the candlesticks and what are these candlesticks. For for instance, guys, candlesticks are these small sticks that you see on this picture, or the sticks you'll see when you open your MetaTrader or any charts that you'll open. Those are candlesticks. So interpreting candlesticks is a piece of foundation in technical analysis. You can't be a trader if you can't interpret candlesticks. Yes, that's right. If you want to master technical analysis, you also have to be good at interpreting candlesticks. So candlesticks expose the full trading psychology among buyers and sellers based on its full body or doji. So what is the meaning of that? As you can see, guys, on this attached picture here, we have two types of candlesticks, being the green candlestick and a red candlestick. So usually this green candlestick is for a buy or a bullish price or a bullish trend, guys. You'll basically see this type of candlesticks when the market is bullish, and the red ones when the market is bearish or going down. So this is the body of the candlestick, and these are doji, as you can see. So it displays the opening, closing price, and the full range of price movement across a specified time. The time frames can be seconds, minutes, hours, days, weeks, or month. Yes, that's correct. If you open your charts, guys, you'll have the option whereby you can choose your time frames, whether you can go for seconds, minutes, hours, days, or weeks. So if you go for 5 minutes, that means a candlestick will form for 5 minutes, and after 5 minutes another candlestick will form. So if you go for 5 minutes time frame, that means every 5 minutes you will see a candlestick forming. So let's get to see what that means. So when as you can see on this picture, guys, at the bottom here, this is whereby the candlestick opens, and with time, let's say for instance you are in 5 minutes time frame. Within that 5 minutes, this candlestick will form, and when that 5 minutes ends, this candlestick will close here, and then you will have another candlestick forming right at the same spot whereby this candlestick ended. So you'll have an opening there, and then have the body of another candlestick, and it will also close when that 5 minutes end. Same thing with this red candlestick here. It opens at the top because this is for when the market is going down, and then the body between as the time goes on, and when that time ends, this candlestick will close here and another one will open right there and form the body, and then it will close according to the time frame that you chose, guys. So that's how candlesticks are formed. So these candlesticks can help us to determine the direction or the movement of the market, because the aim for technical analysis is to be able to interpret the future movements using the previous movement. This is what I said on the previous video. So once again, if you are new to this channel or you didn't watch the previous video, please go and watch that previous video so that you can be on the same place with us. So when a candlestick forms a hammer, we also have what we call a hammer: long wick and small body. Long wick, we know that wick is the upper part, and then the small body, this is what we call a hammer. Facing up or facing down, this is an inverted hammer. So a hammer is more like this. It has a small body and a long wick. So this indicates a downtrend if you see any hammer, or any hammer on the upwards movement. Just prepare for a bearish market, because once this price loses its momentum here, you'll have an opening here, and then the market will go down just like that. So once you see a hammer, just prepare for a for a sale, because the market is bearish. Note that this only happens when the market was bullish at first. If the market was like this, you had the market going up like this, and you see a hammer here, just know the market will change direction and go down, go all the way down. So hammer represents a sell only on the upwards trend. So we also have what you call an inverted hammer, which has a small body and a long upward wick, just like this one here. This is inverted hammer, and this one represents upwards trend. When you see it on a downwards trend, just like here, the market was still going down and we had an inverted hammer here. So, and absolutely the market started going up. So this how this hammer and inverted hammer works. So let's pass to the next type of candlesticks. So we also have what we call a engulfing, either bearish or bullish engulfing, guys. It will depend on the market. So when a candlestick forms engulfing, either bearish or bullish, that indicates a reversal. It compromises two candlesticks. The body of the second must engulf the body of the first. In fact, the body of the second candlestick must engulf the body of the first, and that must be opposite colors. So for example, guys, if the market was still going up this way, and you see the market forming this, this is what we call bearish engulfing, because this market was still going up, and then absolutely here it will start going down, because these candlesticks changed from green, which represents a buy, to red, which represents a sell. So this is whereby the market will start reversing, guys. So we also have what we call bullish engulfing, which means that our market was still going down this way, and then we start to see a green candlestick which represents a bullish trend, and in that way the market will reverse here and it will start going up. That's how either bearish or bullish engulfing candlestick works. So we also have what we call morning or evening star, guys. So when a candlestick forms morning or evening star, it also shows a reversal. These are the reversal candlesticks, guys. They only form either on our supports or on our resistance, either or horizontally or vertically, because you know that this one's works when the market is absolutely horizontal, and this one's works when the market is on the uptrend or on the downtrend. So you'll find these candlesticks where the market reverses either up here or down here, either up here or down here. So you'll see those types of candlesticks whereby the market is more likely to reverse. So we use candlesticks as our confirmation. So we also have morning and evening star. So a morning star is a 3 candle pattern beginning with a candle that is strongly down. The second candle's real body should be small and should not touch the previous candle's real body. The third candle should be strongly up. So if we had the market going down this way, and then when it reaches at our support, we see this morning star, and then after the morning star we see a strong candlestick. Just prepare for a buy, because that market is absolutely reversing here and going up. So the same thing with the evening star, guys. The first candlestick must be strongly a buy, because our market was going all the way up. And for example, let's say this is our resistance. So once this evening star forms, just know the market is absolutely preparing to go down or to reverse. And if you see this bearish candlestick after an evening star, just enter your sell, and that's the sign that the market is absolutely going down and reversing. So this is the end of our lesson, guys. If you managed to reach this far, please like the video, share with your friends, please subscribe so that you can be notified every time I drop a new video. Thank you very much. Let's meet on the next video.